Anyway, welcome to Money Mondays. Every Monday, 3:30 p.m. Central Standard. I have a co-host here, guest co-host. Why don't you go ahead and introduce yourself, man? Because you don't look like Ferris, but you kind of look like Ferris.
Not quite. So I'm the more charming younger brother, actually. Not by much, but a little bit younger than him. Background here is actually in the more investment world in general. Background in the finance world.
Yep.
Spent years in New York City, worked for BlackRock. Eventually made my way back to Houston, which is home, where I was raised. And here we are, working together on Disrupt Equity.
Love it, love it. So Mr. Tarek has been with us for, I'd say, over a year now, right?
Coming up on a year, just under.
Coming up on a year, has a lot of great qualities, one of which he knows a lot about investing and finance. And so we have him as the head of, amongst other things, investor relations. So that's what we're talking about today, guys, is how to handle investor relations as a multifamily syndicator. But I would say a lot of the overlap is, this is obligatory for, I'd say, anything that you're going to invest in, right? You want to be able to communicate with your investors, right? When you say, isn't that important?
I think no matter what you're doing in life, and I'm not the first to say this by any means, you're always selling, right? And when it comes to real estate syndications or just any business in general, you're also selling. And in this capacity for us specifically, we are selling our deals, ourselves, our entity, our trust, and ultimately selling ourselves to these investors and letting them know that, hey, we are worthy of being in control of your capital and being the custodians of your capital to put it to work for you.
Yeah, I always say that we're providing opportunities to investors, right? Where, people can, hopefully get an outweighted return to, say, the stock market and, ultimately the tax benefits and everything else that goes along with commercial real estate, right? So my point being is, folks, is that even if you're not doing multifamily, maybe you're doing single family, or maybe you're doing some other investment vehicle or whatever it might be, right? These are some best practices and some stuff that, we wanted to just kind of be forthcoming about. How do we do it, right? How do we go about raising, equity? We're going to come up when we're finishing up this raise, which we're essentially done on our latest deal, Point at Cypress Woods. We would have raised $23 million with the help of the Open Door Capital guys, which we're excited about. And that's going to put us over $30 million for the year.
Yeah.
So, we know a little bit about raising capital. And then me and your brother have raised another almost $25 million, over the course of our career. So, this is coming from folks that have raised over $50 million, people. So take some of this advice to heart. We'd love for it to be interactive. So if you have any comments, questions, maybe you have some best practices and some tips, right? Drop them in those comment section on Facebook and let us know what you think, right? But we're going to dive right into this. It's going to be a little bit of a Q&A. I'm going to roast this guy a couple times, right? Throw some curveballs. I'm just messing with you, man.
Just a typical Monday. Look forward to it.
Typical Monday, right? So let's get right into it. What technology and systems do we have in place to manage investor relations? And I think we're also going to talk about, maybe we don't name any names as the platforms, at least when it might be negative. But let's maybe talk about the positive one that we're going to go to.
Sure. So, this is kind of more of a high-level discussion about what is it that you look for in a platform in general, and from there, which ones are capable or lacking in their competencies, right? So, with regard to the actual technology and system that we utilize, there's a couple pieces. First of all, ultimately, first step of the process is that people hear about you in some manner, referral, something that you do outside social media or marketing, whatever it may be, and they want to talk to you, right?
Yep.
So, as part of that, at least with our process, we actually allow them to have a direct conversation with us. It's not just hey, here's a closed door and it's a black box is what's actually going to happen behind the scenes. We're pretty transparent in general as a company as well as with our investors. So for us, first step is schedule a call with us, right? Get on a call. And for that, we use a pretty typical software everyone knows about is Calendly, but you can use Acuity Scheduling. Any of these softwares, they all do the same thing, right? Just for streamlining that piece of it, which is a no-brainer. But after that, of course, we like to do face-to-face conversations, video chat these days, post-COVID world and so on. We use Microsoft Teams, but Zoom or anything similar, same idea. But those are just the infrastructure behind the scenes.
So let's pause there, right? You're trying to, I'd say it's not going to be a marketing show. We probably should have that, Shanna, right? Maybe in the future about, how do we do some of our marketing, right? Because this is kind of, after we've marketed to somebody, we've got them interested in reaching out to Disrupt Equity, right? They're going to hit us up through one of our various channels, right? Mainly our website, right? And then from there, they set up calls with Tarek and his team, through, whether it's Teams or Zoom, whatever it might be, right? We're just trying to get some FaceTime, understand your goals, right? And make sure that they align with our goals, right? If you're a guy or gal and all you want to do is new Class A development in New York City. Well, guess what? We're not the guys and gals for you.
Yeah.
That's not what we do, right? So we want it to be a good win-win, or you're going to just be constantly disappointed in the deals that we put in front of you. So that's one of the reasons why we do that. And then the other reason is just, so you can understand, who we are as a company, right? As a firm. What is our culture, right? And then ultimately win over your trust, so you invest with us.
Right, and that's the key thing, right? Where it's not a sales pitch, it's a conversation, right? It's a two-way street here.
Yep.
So as part of that, we like to understand what is your existing context, whether it be your professional background and so on. How did you actually find us and get into our world, and what interests you into real estate generally and multifamily specifically? And that way you see kind of based on your content and your context historically, what the conversation needs to be like, right? It's kind of an off-the-cuff kind of situation, but if somebody comes into the game and says, hey, I've invested in the past and I've had a terrible experience with real estate, well, guess what? That conversation is going to be very different than somebody says, I've invested in many syndications, I love real estate, I'm sold, right?
Yeah.
It's more a
You
question
don't have
of
to sell them on the concept.
Yeah.
You're maybe more, introducing the opportunity as well.
introducing us personally, the opportunity itself, and just they have the context to know about the general information. Now it's more about the specifics of, hey, why are you different? Why should I put my money with you as opposed to into this asset class in general?
Yep, absolutely. So you get a lot of questions, right?
Tons.
And I want to kind of talk about this. I'll probably provide an answer as well on this one. How do you streamline all the questions that you get, right? I know that it ultimately always starts with the initial phone call, right? So let's just say we won them over to the Disrupt Equity family and they want to invest with us, right? Say we actually have a deal, right? Is there a process that you have that kind of allows you to streamline all these different questions? And we talked about this morning, so I'd like you to kind of talk about that a little bit too, right?
Yeah, I mean, first and foremost, it depends on who you're talking to, right? So there are kind of two categories of investors. There's institutional and then there's retail, right? Mm-hmm. With our platform, with our reach, with our prevalence, if you will, we focus a lot more on the retail. We have the institutional connections. That's not a problem, right? With my background in New York and BlackRock and so on, we have access to all of that. But that said, we like retail. Ultimately, there are favorable reasons to go with either side, but for where we are in our journey right now, we like retail investors primarily. It makes a lot of sense. So everything starts with the conversation, right?
Yep.
And first and foremost, you have those conversations, and as you continue to hear questions repeatedly, then it becomes a question of, well, how do you optimize this whole situation, right? And as part of that, what we like to do is when we hear these questions over and over and over, we develop a little script that we'll follow in these conversations. And they're not necessarily you got to follow word by word, but at least an outline as to how these conversations are going to go to make sure that you at least hit on all the appropriate topics that are going to be interested and important in these conversations. So once you have those, we even can take it a step earlier in the conversation and try to preempt a lot of this, where if they heard of us because there's a deal that we have that we're raising capital on currently, well then let's incorporate into our FAQ section, right? Let's kind of address a lot of these questions just to keep our time, first of all, you make the most of our time and understand that we have limited resources in terms of how much time we have available too, right?
We're not a Cardone Capital folks, right? We don't have 50 investor relations people, right? You're talking to both of them right now, right? And then Ferris obviously helps out too. Yeah. So we don't have a big team, and therefore we always have to be as productive and as efficient as we possibly can, right? Yeah. So to kind of, I guess, maybe elaborate a little bit on what Tarek's talking about. So we have FAQ section that we'll usually include in every deck, right?
Correct.
And those are going to be just questions that we know people are going to have, right? Maybe not everybody, but there's definitely going to be somebody that's going to ask, how much skin in the game do you have? Because every single deal that I've ever done, somebody has asked me that question. So we've tried to include those as well as a few that are specific to the deal.
Yeah.
But even prior to that, right? What we're talking about potentially doing is maybe even having, some videos that really kind of describe Disrupt Equity in detail to kind of get past that initial bump of, I just want to hear from somebody. I want to see what they look like. I want to, hear how they talk about their firm, right? And answer some of those real the real standard stuff that people are going to ask. And so we're talking about rolling that out as well, right?
Yeah, so I mean, all conversations, they typically are going to have a few key things that everyone wants to know, right? Pretty standard questions, nothing out of the ordinary, but who are you? Why should I invest my money with you? What makes you different? What are the risks you faced? All these things that everyone wants to know these, right? Yep. So rather than having to repeat yourself like a broken record, let's just simplify it and automate the whole process. Ultimately, we are a tech company here that happens to be applying our technology to real estate, right? So trying to leverage where appropriate our time in these technology platforms that can help us. So one of the things we've been talking about and looked at this morning is, well, you know what? A lot of these conversations, we really do kind of do most of the talking, right? And we know a lot of the questions we're going to ask, and by the time we go through our script and we touch on everything, and we ask them at the end, hey, what questions do you have? Most of the time people will say, hey, you've answered everything I had on my mind without even me having to answer any questions or ask you any questions, that is. So we're trying to build out a process now where we're going to kind of remove ourselves from having to say anything in the first place at all by just recording it one time, allowing people to watch this video, which would save them time, first of all, by not having to talk with us for as long, and of course save our time by not having to repeat ourselves with every single person. And then from there, once they have that gist about who we are, what we invest in, what are our criteria, what are our assets, the markets, all that sort of stuff that people want to know, then it becomes a question of, if you have anything else you want to know, then let's jump on the phone, right?
Absolutely.
Let's use that time very efficiently.
So yeah, what we're trying to do here is really just kind of catch those, the like I said, the real standard stuff that everybody asks, right? How long have you been in real estate, and how many projects have you done? How much, what's your unit count? What's assets under management? And,
How do you manage it yourself?
Have you had any exits, and what are those returns, folks? For the most part, every investor that I've ever talked to asks the same stuff, right? And so what we're talking about is maybe potentially introducing some videos, and then at the end of that, right, allowing them, hey, if you still have questions, hit us up here, and there'll be a link to one of our calendars, right? And so I think that helps people, because at the end of the day, people have questions. They need to get comfortable with us and the deal, right?
Ultimately, they want to know, at the end of every single conversation, there's never an exception to this. Everyone wants to know, how can I get notified of your future opportunities, right? So why would we not automate that process in the first place?
Absolutely, absolutely. All right, so we got some questions that came in ahead of time. So what are what are questions you would recommend new investors ask before investing with the syndication group?
Yeah, good question. So first and foremost, understand their background, right? These are pretty general conversation topics, right? Just to understand who they are, who makes up the team. Do their investment strategies and their ethics, key one right there, do they align with you? And I say that because some people, this kind of goes into the ethics conversation of how much skin in the game do you have, right? There are people out there who are just fee shops, right? I'm sure we've all seen them, or we'll have heard of them at least, where they just want to make their money on the entrance and the exit, and they don't really care how well the deal itself performs. They're in it for the short term, and that's fine. There's always a handful of those people, but they're never going to last, right? They're short-term players. We're not like that, and there's a reason for that. But key things you ought to focus on is, well, ask about their track record, right? Have they gone full cycle on deals? And if so, how well did their results pan out compared to their original expectations in the first place? Beyond that is, do you have any skin in the game yourself, right? And if so, how much? Just to say I have skin in the game, that doesn't really mean anything, because it could be literally $1, and technically they could say that and get away with it. But ultimately, is it 10% of the deal? Is it 20% of the deal? Is it negligible amount where it's not really anything meaningful? Ultimately, you want to know that there's enough carrot on the stick here where there's an alignment of incentives that whatever they do on the deal itself is going to be in your best interest, because it's also in their best interest, right?
Yep.
And that both parties win here. And then one good question that I think not enough people ask this question, but I think it's great, is what is your biggest failure, right? What challenges have you actually faced? Because inevitably, if you've done enough deals, if you're actually a player here, you face challenges. Whether you want to admit it publicly or not, it's happened. So it's good to kind of pull those strings and understand, well, when was the time that something didn't pan out as you promised?
And I think that let's pause there, because that's actually a really good point, folks. I think that is one question that I've always asked of other syndicators, right? We invest passively as well. And so the one thing is what has been your biggest challenge, and how did you handle it, right? Because everybody's going to have ups and downs, right? I wish I could say that every one of our deals was like a rocket ship and it just took off because we're the best things in sliced bread, right? But unfortunately, the market and maybe management companies that we had used in the past and various other things that maybe we couldn't foresee, or we didn't handle very well, ended up blowing up in our face. And so the biggest proof that somebody is going to be a good manager of a business is how they handle pressure, how they handle those ups and downs. And, and I think that that's an important thing to understand, right? Because, the other thing that I'd also ask is, if they are a new investor, right? Maybe they don't have a track record, but I still might like the submarket or like the deal, right? I'd ask them, how much business management experience do they have too, right? Because you're buying a business, which is what multifamily syndication really is, right? And so, do you have any experience in doing that? And I'd say that there's certain people that I'm just like, you know what, maybe seems like a good deal, love the submarket, but you're maybe just not the right operator for it, right? Because if you have no experience running a business and don't understand some of the key KPIs that you have to really track in this business, it's going to implode almost immediately.
Yeah,
It really
and I think
is.
some people get conflated with the aspect of, yes, people see real estate as a passive opportunity, sure, but guess
Yeah.
what? It's a passive opportunity for your limited partners, right? As
Yeah.
the GP, the sponsor, it's not passive. It is a business. You are
absolutely
the
not
head of the entire entity, and you have to operate as a business and track everything accordingly to make sure that you operate it as though it was like a McDonald's, right? Just
Yep.
you're there day to day. If once as an LP, sure, you can sit back, but as a GP, you have to be involved on a daily basis.
Yeah, and I love that you bring up the McDonald's franchise model, right? Almost, right? You know, I mean, we're slamming our processes and systems on top of the management company, and it really should be, in most cases, it's a rinse and repeat, right? Now, the business plan might adjust a little bit, right? But what we expect to see and how we're going to manage people and how we're going to manage the asset should essentially be similar across the board, right? So we're talking a lot about investor relations as it relates to prior to making the investment, right? You know, but there's other parts of investor relations that for the most part I'm handling at this point, right? Whereas you get them to invest, right? Now what? What's next, right? You have to communicate with them, right?
Yes.
And I think one of the platforms that we do use is Active Campaign.
Before you do that, one more key question that I think you definitely ought to ask, and again, a lot of people don't ask these questions, but one that I think is fantastic is, first of all, ask them, who else in the industry do you recommend I work with, right? Because they obviously come to you for some reason. They like that.
I like
but
that.
one of the key things is,
Are
they arrogant enough to
what
think
happened,
that-
Shanna? Saying the screen went blurry.
We're back.
So
So
it's all good. It's all good.
yeah, I think it's important to ask who else you recommend in the industry. Because first of all, you're going to see,
That's true.
are they arrogant enough to say that they're the best in the world out there? Since, you know, sliced bread, boy, nobody's really the best, if you will. Everyone has their own area of expertise. And see, who else do they admire?
Yep.
And are they willing to kind of get the best outcome for the investors, or are they just looking to kind of hog it all for themselves? Say that ultimately we want all the investors to invest in our deals only, when in reality we know all of our investors, right? The vast majority of them, while of course we would love to have them invest all their capital with us and in all of our deals, we know that at the end of the day that they are looking for the best opportunities that are out there. And if there are better opportunities than what we can provide at a given time, then hey, we'd like to recommend people that we trust, people that we know are going to handle them well and treat them well and not burn them. Because if they burn them, even if it's someone else who does it, it still reflects negatively on us and our industry as a whole.
I agree, and I would say the other thing that I would add to that, right, you know, is that we're not going to have a deal at every single point during the year, right, you know, and so sometimes there's a finite amount of time, especially as we get closer to the end of the year. People are always hustling to try to get some depreciation,
Tax
get some
benefits.
losses, right? So get those tax benefits, and you know, especially last year, I wish we had a deal in Q4 because there were literally dozens of people had reached out to us, and we just didn't have anything at the time. And then literally, like right after Q4 was done, we got Porterwood going.
Yeah.
So, but at the end of the day, it happens like that. So you need to be, if you're forthcoming with that information, sometimes that builds a level of trust too, right? Because you're willing to you know, refer over somebody to a competitor, essentially, right?
Who are you looking out for, yourself or for your investors?
Absolutely.
That's what it comes down to.
You know, I mean, I want people to be able to turn their money. That's the most important thing in this business, is constantly be investing. It doesn't matter if you're investing with me, but be investing. If you take away anything today, is that you should always be putting your money to work, right? You know, but to kind of get back to the platforms and the software, you know, question here, I wanted to kind of, we currently use IMS, but we are moving to potentially invest next. There's Syndication Pro that's out there, and there's Juniper Square that's out there. There's a few other ones, but those are probably the four main ones that we've, you know, had access to and demoed. And those are to manage your investors, right? From the paperwork process to providing distributions to potentially even communicating to them, right?
Yeah, so a lot of this is on the category of software, right? And obviously the biggest tip by and large of managing investor relations is going to be use software, right? And this probably any part of your life. If you're technically competent, use software. Make your life easier. And to that end, we use Active Campaign for communications. We have these different, what you would call these investment management systems. The one that we are currently using is IMS. It's okay, nothing's perfect, but it gets a job done. We're probably going to migrate at some point in the near future to InvestNext or something similar, where these ultimately allow you to keep everything in a centralized place. Because a lot of investors, they always ask, well, is there a portal or where can I get this information? We don't want to make them have to go and dig up every email and find something from years ago, which ultimately these deals go on for 5-7 years. They could go on for longer. So we're not going to make them go and dig for it. These are just centralized repositories where you can have all your communications tracked there, all the documents that they may need for tax purposes or accounting purposes, whatever it may be. And then similarly, distribution of the funds themselves, right? Have it tracked all in one place so that, first of all, it makes it easy on our investors to find their information, but also from a selfish component, it makes it easier on us because we are not having to field all these questions and emails that are inevitably going to come our way to ask us, hey, can you get me this information? Or hey, where can I find this? Case of, hey, go to the portal, check there. It's probably going to answer 99% of your questions. The exception, come to us, right? We're happy to get involved and be a little more manual with it. But that is a key piece of the process. Software is ultimately the name of the game here, right? So
Absolutely.
that'll do that.
Absolutely.
But the other piece of software too that's kind of separate from that is having a CRM, right? Some people, they have their investors in literally their contact list on their phone, right? Which, okay, cool, that
Or
works.
they got
for me.
business cards in a drawer. I mean, we've all been there prior to kind of setting up a system, right? You gotta get away from the business cards, and then some people will, like you said, they'll take a picture of it. And maybe they'll be their first pseudo CRM, or they'll have something in a spreadsheet. But I think if you really want to take it to the next level, you have to have a CRM, which is what?
So customer relationship management database, and when you're small, fine, you can kind of get away with these let's call them antiquated methods, right? Business cards, contact phone book, if you will. Those are okay, but when you go to the scale that we're at and you're managing, literally working with thousands of investors at this point, you really need a more efficient way to be able to track things. So for us, we have a CRM system. We primarily use Nimble for that, which is nice because it pulls a lot of data from all sources across the internet into one place. So we can track and understand who is this investor, right? And beyond that, more importantly, is to be able to segment that list of investors, right? Because at the end of the day, the way we operate as a company, we provide a lot of content there, a lot of education to people, for people who want to get into the game, but also a lot of information for people who are already in the game, right?
Yep.
So we're able to track who are the newer folks, and even from there, a little more finer, who are the tire kickers, who are just here to learn, but they're never really going to pull that trigger, which is unfortunate because they're missing out on a lot of opportunity. And then who are the actual players who are invested, and beyond that, once they're investors, how often have they invested, right? You want to take care of the people who are repeat investors with you, constantly working with you. They trust you, obviously they like your support, and you want to cultivate that further to make sure that, hey, you take care of them, and that as you have continuous deals in the future, you make sure that they're aware of it, because there's a good chance that they're going to invest in you continuing forward.
Absolutely. So, why don't we check Facebook real quick? So I want to recap. I know we went through a lot, folks, and this is probably a topic that we might revisit, just to kind of encapsulate, because this is so important to understand, right? So you have to get the investor in, right? You need to have a mechanism to be able to set up those initial meetings, right? Because you have to have an actual relationship with your investors if you're doing a 506B. And as people have seen on past shows, you have a 506B, which means you have to have a prior relationship with those people, or you have a 506C, which means I can go blast it on Facebook if I really wanted to, right? So you need to have that whole mechanism in place, right? Then you got to get them comfortable with us and with the deal. Then you got to go through the whole paperwork process and getting their wires in and actually getting them into the deal, right? Which can be a whole process in itself. And maybe that will be, part 2 of this, right? Is kind of going more into when we have a deal, because that's a big part of what you do, especially when it's a big raise. You might have 100 investors, right? That's 100 sets of paperwork. That's 100 wire transfers you got to keep up with.
Probably 500 emails.
Maybe 500 emails. You've got dozens and dozens of questions, right? Because everybody's gonna have at least a couple, and you got to keep up with that. So we'll probably we'll set that aside for a part 2 version, right? But then you got them, right? They're in the deal. They love Disrupt Equity. They love your firm. They love the deal that you're putting together. But now you got to take care of them. So the one thing that I say is that's the easy part, really. Now you got to do the continuing communication with them and keep them happy, and then ultimately, execute on that business plan and do distributions, right? Yeah. Because people are investing not for because they like you. They want to get some kind of level of return on their money, and so we typically do monthly reports, which are essentially executive summaries along with the full financial packages provided to each of our investors on each deal each month. Right. So, and a lot of that, obviously I have a team, but I look over every single one of those and I kind of fine tune them. And then I am also ultimately the one that usually press send on every single one of those. Right. But in between that, you're going to have questions. Yeah. Right. And it's mainly about, what about this, or how about that, or how are things going? Right. They're going to have those, continuing communications that they're going to want to have with the sponsorship group, and you got to take care of them. And then on the back end, right, when you go to sell the deal, you're going to have to be communicating all of that as well. So investor relations is not just about that front end process, it's also about the back end. So take that into consideration. But any questions we got? Any comments?
Yeah, and a lot of these kind of tie together, but Mike asks, how do you communicate the progress of a deal as it goes along? And you've kind of hit on that, right?
That's what I just hit. So we're doing monthly updates. Some people do quarterly. Some people do less. I would say I wouldn't do less than quarterly, right? But once again, it's, think 4 or 5 paragraphs with some data points in there, and then we literally attach the full financial package, which is going to have P&L, balance sheet, general ledger, bank statements, the whole shebang. It's usually 150 pages long, and allow our investors to ask questions off of that.
Yes, and a lot of this is one of my favorite movies is actually Batman, right? And in that movie, Joker he makes a comment to the effect of, if things go according to plan, nobody goes mad, even if that plan is a crazy one, right? But when things fall away from the plan, then it's a problem. So in this case too, ultimately, a lot of it comes down to setting expectations one way, right? And then fulfilling your promise on how you set the expectations. So if you're gonna tell folks, hey, we're gonna do XYZ monthly, they're cool with it, right? But if you fall off 1 month and you don't, week 5 passes and you haven't sent out, investors are on top of this. A good handful of them, they're sharp, and they say, hey, why haven't I heard this? But usually we hit our targets, so that's not usually a problem for us. But we've heard from a lot of other folks about what their experiences are with other people where they were promised monthly distributions, they don't get them until quarterly, or communications where they try to get a hold of somebody and they can't get a hold of anybody at all. And again, these people have invested their capital with you, so it's not okay.
And we've heard that a lot, right? I think, you've got to, it always err on the side of over communicating, right? Is how we approach every single deal that we do, right? Now, there's been, some challenges that we've had in the past. I'll always admit it, that we could be better, and I think we've since kind of solved that. But it's a lot of work, right? Between drafting all of those, refining those, and sending those out, that's a good day each month that we have to put aside and actually do it. But it's important, right? Because we're being transparent as far as things are going, right? And so people appreciate that. So I know we're running a little bit short on time. So do we have some additional comments?
Yeah, the only other one was, and Rasul, you kind of saw the question already got answered, which is how often do you update investors? Like you said, for us, we do it monthly, but one of the key things too is within our company, and I hope more of the people out there are similar, is that we keep our doors open all the time, right? Anytime you got a question, whether it be for me, Ben, Shanna, anyone on our team, we always keep our lines of communication open and reach out to us, right? Most people have my phone number, they can text me, they can call me, they can shoot me an email, or anyone else here, frankly, that you're in touch with. And ultimately, if there's something that you have a question about that was not answered in that monthly update, let us know, right? We'll get into as fine of detail as you want, or as high level an overview as you want to get your questions answered.
Absolutely. All right. So,
and probably the most important question, if I may, David asked the question: is that Tarek from Flip or Flop? Ben, am I from Flip or Flop? Is that my wife?
No, and I'm thinking that guy might be a little bit more handsome than you, buddy. All right, so just it is what it is.
I will say the funny thing about that is that
there's been several people that have asked that question to this guy, though.
It's funny because my whole life I've barely met anybody with the name Tarek, never anybody with the name Tarek Musa, and then this guy comes out of nowhere on this very popular TV show with the same first and last name, and we're both in real estate, right? So on these phone calls, we'll see my name on these call ID or on Zoom calls.
He does some education guru stuff too.
He has now. He's transitioned.
Yeah. So no, this is not that guy. This is as anybody that knows what Ferris looks like. This is just his younger brother, right? Probably 30 pounds slimmer than Ferris as well. I got to throw that in there. But all right, man. So let's wrap up a little bit if we can. What is the biggest tip that you would do in managing investor relations?
Honestly, it comes down to two things. Use technology where appropriate, right, where you can to try to automate a lot of the process. And then number two, which ties into that, is have a system, a script, if you will, right? So have a system to architect which software and system you're going to utilize throughout the process. But when you get into these conversations where it is more of a manual approach, where you are going to talk to someone on the phone, have a script to follow. Because ultimately, you don't want somebody to get on the phone with you and kill a lot of time, and next thing you know, a 30-minute call goes for an hour and a half, and you still didn't hit on the main questions. They're just kicking the tires, asking them a question that's just irrelevant, right? And ultimately, you want to take care of them, make sure they get their answers addressed, or the questions addressed, but you still want to make sure that the key things that are actually going to matter, that are going to allow them to be able to make a decision about investing, are always answered. And the only way to make sure you do that is, hey, have a little template or an outline that you're going to go through to make sure that, okay, well, it may have gone out of order, or maybe it did go in order, who knows? But you've at least hit on all the appropriate topics so that there is no necessary repeat conversation.
No, absolutely. So technology
trying
to streamline
script,
the process, right?
Yes.
And I love it. I'd say that, and you kind of hit on it, there are going to be people in this industry that, like the idea of investing in this stuff, but ultimately have a whole lot of analysis paralysis, folks. So be aware of your time and how much of that is worth, because there's a lot of people that are just trying to learn on your dime. We had a guy, I won't name his name, but last couple of deals, he's had 25 questions on each deal, and then he'll come back with another 5 or 10. He's ultimately just trying to learn the business from us, right? I don't know if he ever really has the intention. I haven't seen $1 from him, but we've probably, between me and Tarek, probably spent hours with this gentleman at this point. And that's not fair. So you ultimately have to stop and say, hey, once we have a deal, we can come back to it, right? But just be respectful of your own time. I think is the other tip too, because people will just try to learn on their own, right? So,
and not even just put it in a negative way, right? I think first of all, of course, you don't want to be wasting your time people who are not interested in actually getting the job done. But more than that, also, by taking so long, the investor themselves, if they are actually a serious player, not just a tire kicker, they put themselves in a disadvantage because
they absolutely do. That's actually a great point. Actually, let's stop there, right? I think that that's actually an awesome point, right? Which is these things move faster than people think. This is not like some stock where it's always going to be around and it's a liquid market and I can buy it in 2 months after I've done all my due diligence, right? These things fill up within typically 1 to 4 weeks. And this last deal filled up in 1 week. So we had a lot of people that were just doing their typical due diligence and it was already done. And I'm not saying that you just have to go on our good name and, don't do any due diligence, but all I would suggest to folks that want to invest with just shops that have more of a track record, I would do your due diligence quicker. Because
don't
it's
sit on the
just
sidelines. That's the key thing. I mean, for this deal, as a perfect example, a lot of these guys are people who had known us in the past, right? This is even their first introduction to us. For this deal, we raised $22 million, and even on our side, we didn't expect to go as fast as it did, and we did it in less than a week, right? Which is incredible.
Yeah.
Now that said, we have to put a stop to things and say, hey, we're full. We cannot take any more, even if we wanted to. Now, even after that timeline, we have had more than 100 people still wanting in on the deal. Guess what? These are people who wanted to ask questions, or whenever we answered one question, they came up with a whole other set of questions. And the question is ultimately, are they ever going to participate? We don't know. It's not really our place to judge, right? We hope and we welcome them to, but you got to move fast, because if you don't want it, someone else does. Because if it's a good deal, which is what we like to bring to the table, someone's going to jump on it.
And so that's advice to the passive investors, right? Advice to a syndicator is also if you're wanting to. You always want to create a sense of urgency, I guess, is my point, right? So even if it's not there in reality, I would say, try to create that illusion, right? Because people have a tendency to really kick the tires too long, or I'll get around to that paperwork next week, or I'll get around to that wire transfer, right? And you're not necessarily lying to them, you're just trying to push them along, right? You're a salesperson at the end of the day. I did sales for quite a while in IT. You always had to create a sense of urgency, right? And in that case, it would be like, hey, this sale or this, this discounted product is only going to be good for the month of August, right? Everybody does the same thing. Now, is that true or not? Who knows, right? But you're trying to get them off and actually take action. So I'd say that's another piece of advice for the operators as well.
For sure, and from the side of the operator as well. I mean, and then I mentioned this because there are some questions that are coming about this, which is how important is image or soft skills or networking skills, and how do you work on them, right?
Huge.
I think here's maybe the best way that I can answer this. People want to ask the question of how do you actually raise money, right? How do you convince somebody to do that? And you know what? The number one easiest way to do so is have a good deal. Simple as that, right? If you have the deal,
that helps.
I mean, ultimately, that's what it all comes down to. I don't care how good of a marketer or salesperson you are. If you have a crappy deal,
it's true.
You may get a couple people, but you know what? It's going to be short-lived. But if you have a good deal, guess what? You're going to have people running to your doors, knocking on, and say, "Hey, we want in on it," and it's going to be a fight.
But it goes back to the age-old argument, right? You need to have the deal first. You need to have the money first, right? And I always tell everybody you need to have both. I'm sorry. It is what it is. You need to build up your brand. You need to build up your marketing. You need to build up your investor list. So whenever you do have a good deal, you have somebody to actually market it to, right? Because you could have the best deal in the world. If you don't know anybody that can actually put money into it, right? Then you could have a problem too. But that certainly helps create that sense of urgency too. When somebody says, "Oh, I love that market," or "Man, those returns look great," that's going to create sense of urgency too, because they know that everybody else is going to see that as well, right?
It moves from a hypothetical to an actual. It's not a case of, "Hey, Ben, I could get you this." It's a case of, "Hey, Ben, I have this ready to go. Are you ready to move now or not?" And if the answer is, "Hey, it's right in front of me. I want that golden goose while it's there."
No, I agree. Any other questions?
No, I think that's really it that we got on this side. So pretty much
Hey, great questions, great comments. I think it's an important thing. I think Shannon, we should probably do a part 2 on this. I want to dive a little bit more into the paperwork process and just kind of, open up our kimono a little bit as far as what we do, right? It's not a marketing. This is more so just the process that we follow, and it's really regimented at this point.
Yeah.
We've done this. We've syndicated 12 deals at this point. So we've had 12 times to get this right.
Yeah.
And each time we find little fine tunings that we want to do, and so we can certainly share some of our tips and tricks on that, right? But in the meantime, if you want to learn some of the great stuff that we've got, Shannon does a great job curating this. You got to get the toolkit, folks, right? So go to www.disruptequity.com/toolkit. It's got our checklists. It's got our webinar replays, including this podcast that me and Ferris have been on, right? And a lot more value, right? We're not asking you to pay for it. We're not selling anything. Just pop your email in there and it'll all be there for you. So what's coming up next week?
So next week, we're going to be talking about how to actually vet potential partners in the multifamily real estate industry. And sounds like primarily from the co-sponsor GP side of things.
Yep.
And perhaps even from the LP side, who do you want to partner with your capital? So that's
I
what
think
we're
that's
talking about
important
next week.
too, right? So that's going to be next Monday at what time?
3:30 p.m. Central.
3:30 p.m. Central, folks. We really appreciate you tuning in. We will see you then.
Take care.